Well, the entire cement universe has come out with its results, and this particular quarter, like in the previous quarter, has been a positive surprise. Margins have beaten expectations, realizations have beaten expectations, and the revenue momentum too has positively surprised the street. This particular quarter has been especially buoyant given the fact that if you're talking about the entire cement pack, most of the cement pack has positively surprised on volumes, and most of the cement pack, when you're talking about the management commentary, what they have alluded to is something that is quite surprising and quite positive. The way in which the volumes have rallied, or the way in which volumes have picked up, have clearly alluded to the fact that, and has actually reiterated the fact that ET now has been saying for quite some time, that it is not just pent-up demand that was seen in the quarter gone by, but actually what you have seen is green shoot of demand recovery. So when you're talking about the entire cement pack, one of the major companies, Shree Cement, would be coming out with its results. When you're talking about the preview, revenues are seen higher by almost 3.5% on a year-on-year basis. As far as the top line is concerned, when you're talking about the EBITDA or the operational profit, it's seen at close to 800 crore rupees, down 6.5% on a year-on-year basis. When you're talking about the margins are seen slightly depressed, almost 250 basis points, but do not be surprised if there is a beat on this particular parameter as well. The main reason why margins are expected to be impacted is the fact that when you're talking about margins, higher petcoke prices as well as higher freight as well as diesel prices is something that could be expected to weigh in on the margins. Talking about the profitability is seen at 380 crore rupees, up almost 24% on a year-on-year basis. Now, what Citi is expecting as far as volumes is concerned for Shree Cement is that they're expecting the volumes to pick up almost 14% on a year-on-year basis. However, what they're saying is that on a sequential basis, they expect that realizations could be quite muted. The other thing, as we mentioned earlier, is that the higher petcoke prices is something that they believe could impact the margins. Now, the key things to watch out for, as it has been for the entire cement universe, the first thing as far as Shree Cement is concerned is the commentary as far as volume offtake is concerned, and also the commentary from the management in terms of how volumes have picked up post the lockdown and the quarter gone by. It'll also be interesting to see what the company says in terms of its expectations for volume pickup, for volume offtake, for construction activity, something going forward. Also, you're talking about, you did see a disruption in terms of construction activity, in terms of the migrant labor problem, and this is something, again, that the company, we would be expecting some amount of commentary over there. Also, in terms of the plant resumptions, the company did have significant capex plans, significant expansion, significant inorganic opportunities too, that the company was pursuing. The other thing, of course, the company was also having significant project expansion plans as well. It'll be interesting to see that as to what exactly the company alludes in terms of these particular parameters.